Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, December 31st, 2018. I just want to start off by wishing everybody happy holidays, happy New Year, and may 2019 be your most prosperous trading and investing year to date. Hopefully I have a hand in that, and let's dive into the charts here. What I want to do today in this video is highlight some trade ideas. I will most likely add one of these ETFs as an official trade idea, and I'm referring to either cut or wood. These are timber and forestry ETFs. But I do want to go through the individual components. There's a lot of individual stocks that stand out for both swing trading ops as well as growth and income trades. Trade ideas, as I've mentioned for the past couple months, have been as light as they've ever been for such an extended period of time. We have very few official trade ideas. It's a function of market conditions and just lack of clearly objective trading ops, but I suspect that will change going forward. In fact, I'm already seeing a lot of quite a few things I'm adding to my watch list here, so I'm going to get these out. I had one trade idea put out today on the home builders, and this is a related trade. So before I get into the charts, I just want to mention, I'll try to convey my thoughts when I put on a trade idea. At times, very often I'll go with an ETF, whether it's a broad market ETF or a sector ETF. It's a lot of benefits there. A lot of individual investors prefer ETFs. You have diversity, number one, safety in numbers. You don't have to worry about earnings as you do with an individual company or any, major headline comes out, the CEO scandal or accounting scandal with a company. So again, you have the diversity in an ETF, and the ease of buying and selling one security to cover a blanket of usually a couple dozen stocks, if not more. Now the downside is when you buy an ETF, just as when you go with the trading an index fund like a SPY or QQQ, where you're trading a major index. If you go long, you're buying the good and the bad, and if you short, you're shorting the most bearish stocks along with the most bullish stocks in there. So with that being said, I've always, usually can do a good job of sniffing out first, I use a top-down approach to the market. So you look at where the market's likely headed, or a sector or commodity, and then drill down within there. And if you can make a bullish case, which I believe I can here, which I'll do today on these timber and forestry companies, then you can usually drill down within the sector and find the most bullish companies, and therefore they should outperform the overall sector by going long the most bullish and avoiding the most bearish. So we'll do that today. And the other benefit here, there's several Canadian stocks in here. I know quite a few Canadians on the site, and I'll go over some of those trade ideas as well for you, so you have some securities that you can trade on the Toronto Exchange or maybe the Venture Exchange. We'll have to see where these trade. All right, so this is Cut. Cut is one of two ETFs that hold timber. Now keep in mind, you can trade lumber futures. That's random length lumber, but these ETFs do not trade and hold futures contracts. So although it's a play on commodities, it's a commodity, in other words, timber, lumber, it's more of an indirect play because we're not, these ETFs do not hold commodity futures, lumber futures. They hold individual companies that are related to the timber and forestry products, like paper companies, lumber used to build homes and buildings and things like that. All right, so Cut is one of the two, and what we're looking at here is a 10-year weekly chart. So what stands out to me is we can see a heck of a correction. Let me measure this out for you. So we can see in relatively short order, again, this is a 10-year weekly chart, but that span right there is about 7 months. A little less, we've dropped about 31 or so percent. So a healthy correction, bear market if you want to go by the 20% definition. And you can see we've had similar drops in the past. So like any other commodity related sector, there's a lot of volatility here and there, but I do want to say that this sector peaked long before the market and has already had a heck of a correction. So the big question is how much more downside? Well, there are no guarantees, but what I can tell you when I look at this chart, I see very nice support right here. I'm circling all the reactions that prompted me to put the line here. I don't just put lines at random to try to make a case that a stock is at support or an ETF or a sector if it's not. So I'm showing you all the reactions there in over the last decade, really. And so that's a pretty significant support level. We can also see we're at the most oversold readings here on the RSI that we've been at in over a decade easily. And you can see last couple times we're oversold. I'm going to circle them here and here. You can see what happened. Just follow stock prices from those points. You can see that although as I often say, oversold is not a buy signal in itself. You want to use it with other factors, but it does show you that number one, the risk reward to shorting or staying short is not very favorable. And again, we're going back a decade. I just circled every single oversold, I'm sorry, and you can see that the rallies from those points ranged from probably as little here as about 28 or so percent all the way up to 75% or more. So you have oversold at support, and then that's the longer term outlook, of course, the weekly charts. And then I come in here to the daily chart, and I see a divergent low. I see bullish divergence here, still potential because the PPO is turning up. It hasn't yet made a bullish crossover. I'm referring to the PPO line, this orange line here, crossing above the signal line, which is a 9 EMA. That will, in my book, confirm the divergence. Right now it's potential divergence, and you can see it also divergence on the RSI. So again, divergence is when prices are making a lower low and the indicators are making a higher high. So I don't see bullish divergence on the daily time frame for quite some time here. So again, take oversold at long-term support with divergence on the daily time frame, and all that makes some nice ingredients for a potential bounce. And this one will most likely be added as an official trade idea here very soon. To that point, I want to mention again that I will go over the best looking individual stocks. So if you are comfortable with trading individual stocks and you want to try to, you have the capital to do so, it does take if you're going to invest in a sector, I would say at least go with 4, 5, 6 individual stocks. If you can't diversify that way, you're probably better off with the ETF, because if you just pick one, if you say, Randy, what's your favorite stock? I don't do that personally. There's not one stock. If I'm either going to engage this sector and sprinkle cash among a half dozen names or so, or go with the ETF, or maybe I'll go with the ETF and then supplement it with a few of the individual stocks that stand out. But again, we'll get into those individual stocks here in a second. But this will be a likely proxy for a trade on the sector for those that want just easy broad sector coverage. That first target is set at 25.65. The resistance is right around 25.80. I like to set my targets a little below the actual resistance level, especially if we are in a bear market here. Then my expectation is that a lot of rallies may fall a little shy of the resistance levels that a lot of traders are targeting. But if the charts continue to firm up, you can see a potential downtrend line there. I have a potential second target here that would become an official target. It's around 26.80. If and when, again, I can see a lot of evidence of the technicals firming up, particularly in this sector. All the better if we can see some, evidence that the broad markets are starting to firm up. And if and when we start to approach T1, it looks like we might continue to rally. Then I'll extend and add an additional target there. Okay, and here's the chart. The weekly chart of Wood, 10-year weekly chart. And again, it's just a different company, same, pretty much the same. It's a different basket of stocks, so 6 to 1, half dozen to the other. I just think we'll go with the cut on this one as an official trade idea if and when I add that. And you can see same story: oversold, extremely oversold, and more importantly at support. A lot of reactions along this. This is more of a support zone that I have here, because you have some reaction highs up at the top of the zone and some reactions along the bottom. So there's a zone there, and you may want to scale in. We could certainly get another thrust down. There's no way to say just because we had a nice bear market rally last week doesn't mean that this leg down in the broad market is over. And although this is not part of the broad market, most of these companies probably don't. Maybe some of these might be in the S&P 500, but when you get that waterfall type, very impulsive, broad-based sell-off like we've had recently, most things get dragged down along with it. So to try to quantify it for you, I think this one reverses anywhere from where it stopped last week, maybe down to somewhere around the bottom of that support zone. Might pierce through their intraweek, but maybe not. Things are starting to firm up. There's the weekly chart, and here's a daily chart. You can see almost divergence, slightly lower low on the PPO, but you can see it turning up, poised to make a bullish cross. Definitely divergence on here on the RSI, bullish divergence, and just like the same divergences work in reverse. If I can show you, let's see, I have a chart here. If I can dig that up. There it is. I was covering the timber sector extensively earlier in the year. This chart's back from May 1st, pretty much right before the sector topped, and you could see my targets here. I had it going on to ultimately break down below this long-term trend line and continue down. These are all the price targets. So again, that was May 1st. We peaked right around 80 and change, and then you can see, so that was right here. So we had just punched up just slightly higher, a little bit above that 80 level, and that was the top. There's May down here. So you can see the correction that took place. So again, this was priced into the charts, just as I believe a rally is now priced in the charts. It works no different. And keep in mind, you go back to these weekly charts. That was at least this correction here was in a rip roaring, some of the strongest gains in the bull market. This correction started. So again, this is a sector. It's a niche sector, and it had its own bear market while the rest of the stock market was in a bull market. So you don't always have to have the broad market cooperating with these niche type sectors. And again, this one's beat down. And I also look at this from risk reward. I think the downside is minimal compared to the upside potential at this point in time. All right, we're going to go through some individual components. Here's a watch list. These are all the components of wood, and then we'll do cut. Might be a little bit of overlap. I'll try to move forward, but there are some different stocks in here. So I'll run through these. I've already marked up the ones I liked. This is UF. You can see the symbol and the name of the company down here. I'll just read out the ticker UFS. Steep divergence on the RSI, not PPO divergence, but there is RSI divergence. And you can see this is just a stock that loves these big, powerful trends. This one's either in a strong uptrend or in a sharp downtrend, very little middle ground, not a lot of side. Here's a sideways trading range. There can be periods where it trades sideways, but you can see the rips and dips in this one are very powerful. So at this point, I'm looking to position maybe for the next rip. Again, not one of my favorites. I have to say that right now. These lines keep moving on TC2000. I talked to a company. I'm trying to get this fix with them, but this one's at support here. I had a line right there before, but if for whatever reason my lines keep jumping around and disappearing and moving, so we'll might have to modify some charts as I get into them here, redo the lines. There's wood. We already covered wood. PCH, bear flag right here. This is a weekly chart. Let me go over to the daily. We'll focus on the daily mostly because I'm just looking for what I believe to be counter-trend rallies. But those counter-trend rallies can measure into the double digits, so I think it's worth it. Strong bullish divergence on both the PPO and the RSI. There's your divergent low. This one would be, this would be a natural target right here, about 34.78. And to try to quantify it for you, you're talking about 12% gain. If it can power on through there, maybe the top of that consolidation area. But for now, let's just target the bottom of these zones. And again, the charts are dynamic, and so is my analysis. If this sector starts to, or continues to firm up, the charts start to firm up or continue to, we've already seen a bounce off the low so far, then maybe I'll extend some of these targets. So there's PCH. I'll go through these pretty quickly. WY, divergence on the RSI, very oversold. quite a bit, and it overshot. Yeah, these lines are moving all over the place. There's your reaction low back there from 2016. You have reactions here, two reaction highs back in 2011, 2012. We undershot it by just a bit. Now, I believe that to be most likely a momentum fueled overshoot. You can, take it as you want. You can say that's a breakdown, that's bearish, but for the same reason, I don't take breakouts on a parabolic run up that take out, let's say it breaks out to an all-time high when it's extremely overbought. I don't chase those breakouts, just like I don't short a breakdown on an extremely oversold stock. Shorting a breakdown of support like this when you're extremely oversold, the most oversold you've been in at least a decade, possibly decades, or maybe in the history of this company. I think the odds highly favor that will be a momentum fueled overshoot. You'll recover the level. That'll be quite bullish, and there would be a nice rally from there. So there's WY. That's the weekly chart. Next one up. RYN. This is also a weekly chart here. Don't see too much that stands out, but I do see the potential divergence. I haven't drawn the divergence line here on the RSI. Not one of my favorites, but worth mentioning. IP, International Paper. I like this one. Again, my lines seem to be disappearing. I have these charts marked up over the weekend. There it is, divergent low, and looks like this one has some room to run. I think if if we can get a nice rally in January, possibly a multi-month rally, which is certainly possible. I don't want to really get off topic here. I'll continue to update my thoughts on the broad market in separate videos, but I think that's a possibility. So you're looking at maybe as much as, let's just say we get to the top of that recent range, about 20% upside in this one. Oh, something I wanted to mention, guys. I should have started earlier on those other companies. On the upper right-hand corner here, this box here in yellowish font, that is the dividend yield. So I'm going through these as both swing trading candidates as well as growth and income trades. Growth and income trades are trades that they're a hybrid or a subcategory of the long-term trade ideas that I put on the site. For growth and income investors that plan to hold a stock for a period of at least a few months or more, because most companies pay out dividends quarterly. These yields can change. When the market goes down and companies fall down, if earnings drop, they could certainly cut the yields, but they're still attractive yields even if this one was cut, even in half. I don't know. I haven't done my due diligence on any of these companies. I would recommend you do that. But again, you're talking a 4.71% dividend yield. This is a P ratio here, trailing P ratio. So a lot of these companies are dirt cheap and paying nice dividends. So I'm making both a technical case based on the charts as well as fundamentally with these companies selling at very low valuations, nice dividend yields, and everything else there. All right, here's a Canadian company, CFP.TO, Canfor Corp. We do have, you can trade this if you're in the U.S., trade on the U.S. exchanges, CFPZF. The chart will look very similar. That would be the U.S. shares. There it is. This one has a decent downtrend line, not super well defined. I don't see an impulsive breakout yet. We've kind of traded through there, but not impulsively, not a lot of volume. So watch this one to start to pick up volume. And there's your nice divergent low. Bullish divergence confirmed on this one. You have the bullish crossover there. And it reversed just shy of that 1409-ish support level. And I think it certainly has some upside here in the next month or so. Next one up, IFP.TO. Interfor Corporation, another Canadian company. The .TO means it trades on the on the Toronto Stock Exchange. So you just, I believe your ticker there would be IFP if you're Canadian. That one, I'm not sure if it has any US-based shares, but nice clean bullish falling wedge pattern. Not much more to add to say. It's also right around support as well. So there's another Canadian trade idea. WFT.TO. West Fraser Timber Company. Not one of my favorite. You know what? I didn't even have that one flagged, so let's skip over that. WEF.TO, Western Forest Products. Nice, again, bullish falling wedge pattern, confirmed with divergences, just like you had negative divergences at these highs. There's no reason that these divergent lows won't most likely play out for a trend reversal. Nothing's guaranteed, but that's why I'm doing the video. Next one up, CTT, Catchmark Timber Trust. There it is. There's your divergence. PPO, like a lot of these, curling up, meaning the momentum is starting to wane. We were, in a very powerful sell-off, but lately these stocks have been holding up. Doesn't mean this can't be a consolidation with another leg down, but again, when you go back to these weekly charts and everything, the case I made before, these stocks are extremely oversold. Some of these stocks have never been this oversold since they've traded, and that creates, a lot of valuation. This one, you're looking at a dividend yield of 7.7%. So again, check those dividends up there, and of course, verify that yourself. Yahoo.com is a nice source. There's a lot of sources out there to verify, dividend yields, and then you can read up on the company, read their news if you're doing your due diligence, and they'll talk about, any likely dividend cuts or things like that. But again, dividend cuts aren't a death blow, and if you're reading about it and it's expected, by the time it comes, if you do get a dividend cut, so a lot of times the stock will rally because that's out of the way. Again, the market in stocks, they don't like unexpected things, but expected things are almost always priced in, and sometimes priced in and then some. So again, I don't want to get off topic here, but these again are growth and income trades. So if you factor that in, if you're looking at maybe on this one, let's say rallies up here to this that reaction low, 25% gain plus add in a 7, almost 8% dividend. If it takes 3-4 months to get there, or 6 months even or longer, that'd be a nice return. So that's CTT. And finally, as the last component of WOOD. These are components of wood that I started with. Last one that stands out is WRK, Westrock Company. Same story, divergent low at support. Nice bullish divergence. I didn't list price targets on all of these, and if as always, if you're a member of the site, you want targets, just drop me a line in the trading room, and I'll be glad to mark up a chart with price targets. Some of these lines I've had on these charts for years, but this is another nice one out of WOOD. So again, take that into account if you're going to trade any of those individual names. So now we're going to go through the components of cut. Here's the watch list. I'll show all the components. So the ones I have flagged, let me put them in order here. I'll just go through these and then we'll be finished. That's about another little over a dozen names. LPX, divergent low, same story. Let's see, GRK. GPK, I should say, and you can see there's different, subsectors or different type of business models within this sector. GPK is Graphic Packaging Holding Corp. It's a packaging and containers company. So you have all different types of companies in the forestry and timber products. Some are cutting the trees down. They own the forests. They own and others will make paper products. Others will make packaging and containers, things like that. So again, it's a sector that's been beat down, and same story across the board on most of these divergent lows, oversold. Some of these I can go to the weekly charts and show you. A lot of these are at or near support on the weeklies, but we'll just stick with the daily charts. This video is running a little longer than I wanted it to, so I'm going to run through the rest of these. Bemis Company. Nice, again, divergent low. You can see on this chart, I've marked this goes back 2 years, and I've marked all the divergent lows, and you can see what happened in each of these instances so far. So history repeats itself, and that's what technical analysis is all about, identifying chart patterns, technical patterns in the past that have, led to certain moves in either direction. And so if this divergent low plays out as the others, we could expect a nice pop. And when this stock runs, again, every company, every stock has its different unique dynamics. The supply-demand dynamics on this one, for whatever reason, whether people load up short on it, whether the landscape shifts quickly, I don't know, but all I can tell you is when this thing runs, it runs. You can see back here from when it bottomed with that divergent low. I'm going to measure it up with the measuring tool. You'll get a pop-up box to the left, and it'll show you the gains down on the bottom. That's a 23% gain in, 8 days? I'll take that all day long. Even half of that I'd be happy with. There's another rip right there, and that's about a 30% gain in 1.5 months. So that's the nature of this beast. For whatever reason, when this stock runs, it runs hard and fast. There's no guarantees it'll do that every time. You can see there's a little bull flag consolidation pattern in the middle. So sometimes when you miss a breakout, sometimes stocks like this can run, and you might not want to buy right here when you see it run up. Sometimes you can get another objective entry on a flagging type action there, and then you would have took it long on the breakout of the flag, or even position long within the flag with a stop somewhat below. So this one has started to run lately, but nothing near these previous moves, but it does look like we have the same divergence that we had back then. PKG, Packaging Corp of America, another packaging and container company, nice divergent low. And again, I don't have the targets listed, but I can tell you right there, there's a nice reaction low there at that point, and a big consolidation area right around there. So a lot of these I'll be looking for a run up to the bottom, at least the bottom of those recent consolidation zones there. UFS, Domtar, divergence on the RSI, very oversold. Let me look at the weekly and see. Yeah, coming up on support. There's a little more downside to it. Hits solid support on the weekly, so that one might have a little more work. Maybe not. MERC. This one has a pretty steep downtrend line. You can see the divergence there on the PPO, and sometimes these that have fallen very sharply can have some sharp snapback rallies, but not one of my favorite. But again, it's worth mentioning. That's why I flagged it. SWM, Schweitzer, Mauduit International. Nice downtrend line to watch. A solid break above that downtrend line. Especially look for impulsive, look for high volume, above average volume. I like to see a breakout occur on 1.5 times or better the daily average volume. That helps increase the odds of follow through. Not sure where that red line came from, so I don't have targets at this point in time, but this one's pretty beat down. WY, I may have covered that, and the other one would. Again, I'm going through the components of cut. I believe I did. RYN, I might have covered that one as well. If not, you can see there it is, divergence. Again, I think that was in the other ETF. AVY, Avery Dennison Corp, business equipment. I know they make label makers, everything, and a lot of stuff out there. But there's the nice divergent low, just like we had a divergent low here. We had a downtrend line at that time. This was a falling wedge pattern, so it's a simple wash, rinse, repeat kind of thing. So I don't want to oversimplify it, but that's a big part of my trading style. Here's an uptrend line. So you look for an uptrend line, and an uptrend isn't, can go and go and go and go. You have a lot of tests of that uptrend line, but what gives you a heads up that trend line will likely break? And, there's a difference when a stock is in an uptrend. Normally you buy pullbacks to support, but once you get the divergence like you had right here, negative divergence, it tells me at that point, don't look to position long on pullbacks to support after a divergent high. Look to position short on a break of the trend line. And that's what happened. You had a downtrend, and then that downtrend ended with, of course, bullish divergence, positive divergence, nice, clean, bullish falling wedge pattern right here. Breakout. That one was quick, popped above it and ran. So most of the gains from that breakout occurred, on the first day. And then we've come full circle. We faded that rally, and we now have another divergent low. Okay, 3 more to go, and we'll wrap this up. WFT, which I may or may not have covered. That one has just gotten the snot knocked out of it, but it's rallying hard. Again, this is what happens when the band is too stretched. This is why I'm more interested in looking for longs at this point than I am for looking to short. If that rally last week in the broad markets and a lot of these stocks didn't teach people a lesson what it means to be short when the markets are extremely oversold, I don't know what did. Markets rallied 5% in one day last week, and that is just indicative of extreme oversold conditions. Like I said, it's like a rubber band. The more you stretch that rubber band, the sharper you snap back. What did that rally mean in percentage terms here? And this is a weekly chart, but 104%. Again, this is an extreme example. That one I probably shouldn't even talk about. It's a sub $1 stock. RFP, yeah, we're getting down to, well, no, actually this one's fine. This is a $7 plus stock. Nice chart here at support. Reversed right off that 736-ish support. I don't see the divergence, but you don't have to have that. I do see the PPO, which is a momentum indicator, turning up. I see extreme oversold readings. The last time we were that oversold was back here. And from that point, the stock rallied. I can't grab that line without moving it. We'll move it there and tell you that rally was, I didn't even get the bottom there. So go a little above the top, about 112%. And now I'm not expecting 112% rally in this company now, especially with what's going on, where we are in the business cycle. But if I can get, in some of these stocks, 10, 20% pop, get in, get out, that's good enough. And that's, I believe, will be the theme going forward. It has been the theme so far in the last few months. It's a trader's market, not a buy and hold market. And that includes on the short side. If you try to swing trade this thing down short now, if you're trying to hold shorts that you had for the last few months, I suspect we'll see a pretty good size rally in the first quarter this year. Most likely, a good part of that to come in January. All right, last one, BCC, Boise Cascade. There it is, steep downtrend line, very oversold, divergence, everything you want to see. I think that's long-term support down there. Yes, it is. 2240-ish. You can see the reactions, see some reactions. So you have, this is a big company. They've been around forever. Lumber and wood production. Extremely oversold. Last time we were oversold was back here. It would have been a great time to buy. We were oversold right here. And even though that wasn't a very long trade, this is a weekly chart. So you had a rally of about, 3-4 weeks that went from low to high. If I can grab that candle, there it is. I got to grab the bottom. About 35, 36%. So I don't see why that stock can't rally at least up to this level, 2650, and that would be about a 13% rally. All right, we'll wrap it up there. Again, dividend yield. Now that one I would expect to be cut if that's accurate. 18% dividend. Doubt any company can sustain that for very long. Maybe, who knows? I don't know. Again, you have to do your due diligence. But I do know these companies have been beat down. So both on a fundamental and technical basis, I can make a case to, start adding exposure to this sector. For those of you that are, looking for longs, and for those of you that believe that we're in the start of some horrible bear market that's going to collapse again, I don't want to get off topic. I do believe that most likely a bear market has started, but I think it'll be slow, drawn out, and I think there will be plenty of money to be made on both the long and short side, strategically engaging these various sectors, various commodities, and even maybe the broad markets, the broad indexes at the right times. And the key is to, wait for the most opportune setups. Try not to be always in the market. Wait for the market to come down to you, or a sector or a stock. Get in, get out, and just don't get married to any one trade for too long. And finally, most importantly, use stops. That's what will keep you from getting burned if you are trying to catch a falling knife, or if you short at the wrong time. Because believe me, I've traded through bear markets before. There is nothing more impressive than a bear market rally. The drops in bear markets can be quite impressive, but so can the bear market rallies, and you do not want to be on the wrong side of either of those trades for too long. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.